Hey guys, so today I'm going to explain, you're probably wondering, what is the Work Opportunity Tax Credit and does it apply to your business, and is it something that can help you save on taxes? So before I get into explaining what it is and if it could work for you, be sure and hit the like button, subscribe to my channel, and hit that bell so that you're notified of new videos when they come out. That way you are in the know and you are going to be a tax savvy business owner. Okay, so the big benefit from the Work Opportunity Tax Credit. Okay, let me show you or tell you about this. The Work Opportunity Tax Credit rewards your good deeds. And now, because of new legislation, the rules are in place for longer than usual. So if you need to hire workers in your business, this dollar for dollar reducer of your taxes is one to know about. Suppose your business hires a member of a targeted group. In that case, you can claim the potentially lucrative federal Work Opportunity Tax Credit for some of those wages paid to that individual. And we'll get into what a targeted group is in a few seconds. So here's an overview of the credit. The credit generally equals 40% of qualified first-year wages paid to an eligible employee in that targeted group, up to a maximum wage of $6,000. So that translates into a maximum credit of around $2,400 for your business. Of course, some employees don't work out, and so the tax code recognizes that and reduces the credit rate to 25% of qualified first-year wages for an employee who completes at least 120 hours, but fewer than 400 hours of service. So that translates to a maximum credit of about $1,500 a year if the employee doesn't work out. So who are eligible employees? Okay, to be an eligible employee, your new hire must be certified as a member of a targeted group by the applicable state workforce agency in your state. So you as the employer can either obtain that certification by the day the employee begins work, or you can complete a pre-screening notice and certification request for the Work Opportunity Credit using IRS Form 8850. And you do that by the day you offer a job to a prospective employee. Then submit Form 8850 to the SWA, your state workforce agency. You don't submit it to the IRS within 28 days after that employee begins work. So I'm going to put a link below in the description that will give you the names, addresses, the phone and fax numbers, and email addresses of the WOTC coordinators for each state. That way you'll have that if you're looking to take advantage of this credit. Okay, so I'll have that link in the description below for you. A simplified certification process is available for qualified unemployed veterans also, so you need to know that. So you can claim the Work Opportunity Tax Credit only if you hire a member of a targeted group. So targeted groups include the following: qualified 4A recipients, qualified veterans, qualified ex-felons, designated community residents, vocational rehabilitation referrals, qualified summer youth employees, qualified supplemental nutrition assistance benefit recipients, qualified SSI recipients, which is anyone who is certified by the designated local agency as receiving supplemental security income benefits under Title 16 of the Social Security Act, long-term family assistant recipients, and qualified long-term unemployment recipients. Now, exceptions to the general rule. There's always exceptions, right? Okay. There's a higher limit of $12,000 for the first year wages paid to a qualified veteran who is entitled to compensations for a service-connected disability and was discharged or released from the military within the past year. So that translates to a maximum credit of $4,800. There's an even higher limit of $14,000 for first-year wages paid to a qualified veteran who was unemployed for at least 6 months in the prior year, and that equals to about a maximum credit of $5,600. So you can see, though, that these credits really can add up if you hire individuals in these targeted groups. You know, you can take a credit on, your return for this Work Opportunity Tax Credit. So There's other exclusions also for long-term family assistance recipients, which equals to around $4,000. I won't go into all the details of all these, because the thing is, if you're really looking to take this and identify, what would help your business, contact your tax preparer or your CPA, and they can look at your specific situation and see if it will work. So, just like qualified summer youth employees, a 16-year-old or 17-year-old who lives in an empowerment zone, that equals 40% of first year wages, and that could be a maximum of a $3,000 credit. So as you can see, there's a lot of opportunity here, and a lot of people don't realize that it's available to them. I just wanted to put this on your radar, that the work opportunity tax credit could really add up to some major tax savings for your business if you know the details. And like you can see, there's exclusions, and it has to be part of a targeted group of people that you're trying to hire, and there's a process and forms you need to fill out. But if you follow that process and you talk to your tax professional, they can walk you through that and really help you save some taxes utilizing this credit. So if this information helped pique your interest, hit the like button and leave a comment below. Go to my website and book a call if you want to talk more about it, about your specific business. Also, look in the description below for that link I mentioned earlier, and for other helpful resources and links to help you slay your tax bill and to grow your business.